Hello everybody. Today is Saturday, October the 19th, 2013. My name is Michael Wright and this is the weekend Elliottwave video. Just before going forward, please do pause the recording and read over the risk disclaimer. Alright, let's jump into the markets. Pretty much interesting with the debt deal finally behind us. A couple of interesting notes. One for sure is I want to place emphasis on the Kiwi dollar, as that seems to be the most clear so far as we head into this upcoming week. Taking a look at the Kiwi, what appears like such is that we ran right into the 161.8% Fibonacci extension. Okay, so if that being said, we now look for a reversal. I'm not going to top pick this pair here, but I will look for a downside break of this ascending channel that has been intact since the beginning of October. So now we look for a break of 84.60 with stops against 85, and then the next downside targets we're looking for 83.70. So just marking about 100 pips lower. Okay. Now, with that also being said, that gives us reason for remaining short the Kiwi yen. Kiwi yen already appears to have broken its ascending trend line, so now looking towards 81.80. Again, that's this one here is a little bit over 100 pips, but the same idea set, looking for the trend line. At the same time, though, with the Kiwi dollar, we're going to monitor this. We might end up taking it and then trailing stops, because what could occur is with this high here, it could hold, retest, bounce, and then break out lower. Alright, we could test, start flagging, and then break. And the spike below there will make it very difficult to re-enter that. We'll end up having to see a retest. So again, short here, may look to lock in some pips here, but then Kiwi yen will remain short that pair as well. Aussie dollar is a bit interesting to say the least. Count, in my opinion, is not that clear as some of its counterparts, but taking a look at the Aussie nonetheless, the weekly is of great interest, especially when you're looking at that triangle that we broke out of earlier on last month. Alright, so give some time for the charts to load. Okay, so this is triangle I'm talking about here. Alright, so bounce could still occur in my viewpoint, and hence why I said it's a bit interesting, but we are running right up against this 50% Fibonacci retracement. So that would be the pinpoint of a turnaround. Until then, I will remain cautious. 97 is also psychological resistance at the spinning top, and then above there we'll expose 99 followed by 102. I don't still rule out prices to come all the way back to 78.6% fib, which is the descending trend line from the 110 highs. Alright, away from that, euro dollar and pound dollar I'm gonna stay away from for now. But if you look at the two, especially the euro, we broke out of this descending trend line. I saw the spike, I was looking for a pullback to get long. Obviously that never occurred, and then getting long up here doesn't bode too well. But then pound dollar, you've seen the same thing. Pound dollar, I will look to re-enter if we could get a back test somewhere near 161. Alright, actually let's put an alert on for that, because that will mark a good point of reference. So let's say 161 tend to grab our attention. I do have different signs, different music playing, but here I do like that entry point. Let's put it a little bit higher, so at least give us time to get near the computer. I may put a buy limit on here. Alright, so I shall go ahead and put it on a sticky as well. Alright, meanwhile, the yen crosses we spoke about there, Pound Kiwi and Euro Kiwi. Pound Kiwi actually came back, took us out at break even. I will also look to re-enter if it makes further moves downward. I would say anywhere back toward that trend line support. So now we're looking at the 61.8 fib, which is at 189.60. I don't think we get towards 189, but at 189.60 I will look for longs against the 189 psychological support level. I may go a little bit lower below there because only a break below will negate that setup. But then you see the same thing for the Euro Kiwi, right? For the Euro Kiwi came back to test that trendline support, the ascending line. So 160.50 looks like good resistance, good support for moves into that 162.60 area. Again, still placing focus on that Kiwi dollar for a reversal note. All right. Away from that, we have the dollar CAD. Dollar CAD broke that ascending trend line. This would have been a good point for shorts. Didn't end up taking that, but I do like dollar CAD's back for long. But with the other Kiwi crosses looking to be a lot clearer, I will stay away from dollar CAD at the moment. And then check out that part. Notice there. At the same time, dollar Swiss inverse of euro dollar. So as our bias for euro dollar remains to the top side, dollar Swiss will remain lower. Same idea set. If you could get a bounce back on dollar Swiss to retest, I'll look for shorts, and then that 88 level. 88 will be the daily support level for dollar Swiss, and then what I'm referring to is the fib notice. Okay, so not too far away. And minus that, just stay on the crosses. I think that'll be the big play for this upcoming week. Euro Aussie, if it does decide to break this descending trend line, then a break above 141.75 will open up that 143 marker. And then pound Aussie, we have a clear a descending trend line here as well, so we need to break above 167.50. Alright guys, so that does it for the weekend Elliottwave viewpoints. Again, I'm gonna stick on track with the Kiwi crosses, as that seems to be the clearest thus far, and as price action progresses, we'll keep you guys informed. Cheers everyone, and good luck trading.